Okay. On the sheet. No, don't stop the time. Once stop the time, you will see it will be showing type for the type. Huh?
We are different on each of the like revenue, the notes, the right side, and get it from that.
Just copy and paste. Okay, so we are going to the next page. I will share. So together we have. So let's forget management account now. We are now going to another one. And that one is budgeting and forecasting. Okay, so let's start. So this is budgeting and forecasting. Okay. So budget also. We have started though. Budget is just like forecasting, you know. We are preparing for like 2 years or for next year. So if we are in 2020 now, you can budget for 2022. I mean, this is 2020, I mean, so you can budget for 2021. So what are the things you are going to spend? How much are you expecting to receive as income? And the like. So how much are you going to spend? And the like. So budgets generally is for proper plan. And then it's also for evaluation. It's for plan, financial plan, and it's also for evaluation. So if you budget for next year, so when you now get to that next year and you look at what you have done so far, you can now compare it to actual and what? And the budget. We look at it, did I perform well last year? Or something is wrong with what I've done? So there's also what we call variance, Abi. So we look at the difference between the budget and the actual. So sometimes it be favorable, sometimes it be adverse, and the like. So that is what it's all about. So here, so identify good ways for managers to what? To use the budget. Identify the components of master budget. Identify the steps that must be taken before preparing budgets. Identify the traits of incrementing or incremental budgets.
Hello,
So-
sir.
Yes.
Which material is this that you are sharing?
This is my own presentation now. This is my PowerPoint presentation on budget. But I can
Okay,
share
I
it.
thought it's one of the.
We are not doing any calculation on budget today because the head is hot already. And so just let's enjoy let's talk together, discuss, so that before you start going, the brain will cool down. So when we now meet next week, we'll do another calculation again. The following week, it's still calculation. That one, your head will. So identify the advantages of performing multiple regression analysis. Identify the causes of favorable and what? And unfavorable. So if actual is higher than the budgeted, then you will investigate what has happened for this to be higher than this and the like. Then we have calculate variance percentage change, like our trend analysis, for those who have done case study. Then identify the goods of a variance dashboard. Know when to use Solver and GoSeek, sorry. Then number 11 is identify reasons to use dedicated budgeting tools. So budgeting within a strategic framework. I will just be jumping and jumping over. Okay, we should probably do it.
And maybe
So you can continue now where we stop.
Okay.
Just take our time.
Sir, please let's just take our time to go through it. Thank you, sir. Maybe next class. Thank you, sir.
Okay, so I have what I'm going to do is that I have just 30 minutes to spend it. And then so what that 30 minutes is just continue from there. There's no more. What's the time now? 5:20. Let's assume I've used 5 minutes already. So 25 minutes to go. So that within that period, everybody will pass shots down and leave exactly 6 minutes. So that we will not pay extra. So the importance of budget. We have budget must link strategics to objectives. It is the statistical implementation of the business plan. So you can see strategic plan. We have now, this is where we are now. Where we are. And then where we want to be in the next 1 year, in the next 3 years, in the next 4 years. Within that, where we want to be and where we are now, what will be at the middle is our budget. The same thing to a non-chartered accountant today in 2024. You can budget yourself. In the next 3 years or in the next 2 years, I want to be a chartered accountant. So within that period, what are the things I need to put in place? That is the strategic aspect of it. So the strategic part of it is now, okay, I will need to go to tutorial. I will need to get textbooks. I will need to find a good tutorial where I will. Okay, I'm working from 8 to 5. So it means 6 to 7. I have to find myself to read at least 1 hour in a day. That is strategic. You have started putting things in place. This is how this thing is going to go. The same thing to companies that are just growing as well. Maybe you have a small company you are starting. So if you start the strategic part, this is where we are today. In the next 5 years, these are the things we are going to do to move the companies forward. Start thinking. I think I'm not using technology. I think I'm not using software. I think I'm not using this. I cannot afford it now. So what can I do to get all this technology within 2 years? Maybe I will start saving money. Maybe I'll go to GT to get loan. These are the strategic plan. Okay. So what are our budgeting goals? So to aid the planning of actual operations by getting managers to consider how conditions might change and what steps they will need to be. The first thing is that you need good personnel, you need good managers. If you are going into a particular project, I know that it's not your area. You get people that can do it for you, that will be able to execute it. Okay. So we have by encouraging managers to consider problems before they arrive. When you are giving me good money, I will also think out of box for you. But if I think out of box today, you abuse me, you do anything like, so next time I will not think out of box. So, so to coordinate the activities of the organization, so which one will come first? We can prioritize. Which one will come first? If we should go for this particular operation or activities now, it will affect us. So we cannot avoid this one now. Maybe in the next 1 year, will be, but you can start planning towards something like that. So by encouraging managers to examine relationship between their own operation and those of other departments. So one department cannot do it. Account departments must relate to other departments. Okay, marketing. You want to get your receivables. The marketers that are selling to people, but they're not bringing money. So you must come together. How are we going to solve this problem so that our receivable will not be going up every time? So communication. Managers have to communicate to the subordinates. So if you're a top manager, and you are a kind of person that nobody can come.
Yes.
Not supposed to be that. So please mute your mic, ma. So that our not disturb us. So I will put together. So you should not be a kind of that boss. To be a boss that they can come to you, relate to you. And whatever you have, there's some meeting that only top management will be there, Abi. Yeah. So whatever is outcome, you have to communicate to your subordinates so that they will also know your goal to achieve together with you. If the management are giving you target for those who used to get target, they give you 1 billion target. You cannot do it yourself to get that 1 billion. So you need your subordinates to work with. So you call them, discuss with them. This is our target, 1 billion naira. So how do you want us to do it? Let's brainstorm. I think we need to increase our sales. We also need to do this. We need to increase our distribution channel. All these things will come together and then give you even more ideas you are not expecting. Okay. So you can also put motivation. You can motivate them, provide a challenge or target, give them money. Sometimes their countenance will tell you that this person is not okay, and yet you are still giving him deadline. You must submit this thing by tomorrow, by next week. You must submit. I know that the person is not happy. So you have to settle that first. What happened to you? What is the issue? We explain to you, this is what I'm facing, and they want to, they gave us quick notice in our house, and that have been stopping. So what do you think I should do? Okay, what if I talk to management to give you loan, then you start paying it? I will appreciate so much. Then push it forward. If the person gets loan and that one is settled, the person will put more effort and you'll be able to meet your target. Then to control activities. Budget is also there. So if one department is spending more than what is supposed to spend, you question them. Then to evaluate the performance, that is the most important thing. So you want to look at what you have budgeted for, and you want to know if they are meeting the target. So you have to look at the budget. So then you compare it to our normal outcome. Okay, so what is the budget framework? What are the components of budgets? So a robust budgeting framework is built around a master budget. There's what we call master budgets. Okay, and that master budget consists of what? Operating budgets, cash budgets, and cash expenditure. Capital expenditure budget. So the operating budget is coming from different departments. As an accountant, you are not the one to prepare any of these three. As an accountant, what you are going to prepare is the master budget. Other departments will prepare the remaining three. HR will prepare its own budget. Production will prepare their budget. What again? Sales will prepare, marketing will prepare, production, what again? Human resources, all those departments, they will prepare admin, they will prepare their budget. This is all we are going to spend for the year coming. And this is what we are expecting to generate. Each of them. That is operating. Then the cash budget too, you prepare that. You see the way we are going to prepare when we get there.
Sorry, sir. How about the department that doesn't generate revenue?
That will be cost center. We have cost center, we have profit center, we have investment center. So it depends on which one are you working on. Are we good to go? So once they bring all their budgets, A submit, B submit, C submit, F submit, you collate it together. As an accountant that know how to prepare management accounts now, you now sit down, you put that knowledge in practice. You calculate their normal income statement, their balance sheet, if possible, their cash budgets, and then you submit it to management. Now, this is what we are looking at in the next, how many years? In the next 2 years, in the next 1 year, in the next quarter. Some people prepare their budget quarterly. Some people prepare it halfly. That is half year. Some people per annum. Some people 2 years. Depends on which way you want to achieve. Okay, let's continue. You can see we are just talking. We are not saying, we are not doing any calculation. So for operating budgets, revenues and expenses for the previous budgets, centers within an organization, budget amount divided into major categories such as revenue, salaries, benefits, and non-salary expenses, encompassing supporting info such as head count and the like. I think it's what we have explained. The capital budget is not talking about expenses that will be more than 1 year. Projects that will be more than 1 year. Maybe they want to build a new office. Okay, maybe they want to build bridge. They want to build road. Maybe your company is into real estate. But that company is into, is a bit far from the main express. And it's giving you a challenge, so you can start planning. If you can get a good road from that your office out, many people will move to that area to come as estates to stay in there if you are into real estate stuff. Those are the capital budget. Then cash budget, an estimate of the cash inflows and outflow for a specific period of time. What will be our receivable? You understand? So you will project from the total sales we are going to have, our receivable should not be less than what? 80, should not be less than 80% that we are going to receive. So you start monitoring your receivable. So if receivable is going down below that 80%, you know that we know who we are going to talk to. So if payable is going beyond particular limits, you know we are going to talk to. So it's just for control and monitoring. Okay. So master budget for a manufacturer company. So the budget you are going to prepare is going for a manufacturer company. A manufacturing company. So that manufacturing company, we are using it because it's more elaborate. So we cannot use, if you use just a school or real estate or so it's a bit, so it will not touch all the areas. But if you know how to prepare this, you'll be able to know others. You just streamline this to what we have. Then someone called me that, are we doing budget based on public sector or private sector? I said, from the people I'm seeing here, most of them are working as a private sector. So we are going to use the private sector area, but knowledge you gain here, you can put it on private sector. So these are the departments that will prepare their own operating budget. We have sales department, which is called sales budget. We prepare their own. Production department, we prepare production budget. Direct material, that is purchasing department, like procurement manager and stuff. Then direct labor, that who's going to prepare that one? HR. Abi? You want to sack 2 people. You want to get 5 people. Okay? You want to increase their salary.
Want to do training.
You want to do training. You want to give them 13 months at the end of December. They will do all those things. If you are getting married, there's a bonus for you. If you are doing naming ceremony, there's a bonus for you. All the budget. They will also do the overhead. But the overhead can be for production and the like. Selling and admin. So admin department will do that one for us. Then budgeted income statement. Who's going to do that? Accountant. So that is where this one we printed in green. That is where you can see. That is where the accountant will come in. For the operating, each department will do that. But when it comes to financial budget, then it's the accountant that is not to do it. So we are going to have balance sheet, we are going to have income statement, and we are going to have what? Cash budget. The cash budget is like the income start, is like a cash flow. Okay, this is the inflow we are going to have. This is the outflow we are going to have. It's not much like that. So it's like a repete, Abi. It's like repete. So major budget for a service provider. You know, the first one is manufacturing. Then for service provider, we are going to have revenue budget, labor budget, selling and distribution, expenses, overhead. Then the financial manager will also prepare something as usual. So you can see that once you know that manufacturing, the other one is still covered. So operating budgets, where to start? Before anything else, you first must what? Establish centers. Create a clearly defined budget organization chart and prepare a budget manual. Form a budget committee. Okay, so the first one is establish budget center. Okay, who are those people that are going to prepare budgets? So it depends on your department. So I think this department should have budget. This department used to spend every year. You can look at your financial statement. You can relate some to this department. That this department, so that I will not talk, I will not overgo beyond the time. You understand? So this department should prepare. So this department. So from there you can know department that should have their budget. Then create a clearly defined budget organization chart. Tell them what you want. What I want to, because most of them are not used to finance all these figures. So you need to educate them. Sometimes you even need to train them. My own where I work, we do training for them because they are not used to figures. To put them together, educate them. This is our budget. What is the importance of budget? This because we follow budgets in like a bomber to bomber, if I want to use that word. So you tell them this is why we are using budget and this is what we want to do. Now prepare a budget manual. What is going to guide them? That one, if you don't have that time, you may not create it. But that's just the standard. Then form a budget committee. Budget committee like 3 at each department, top manager that are going to be there. So you will not be the only one doing the budget because it's not one man job. You may not know what production, what they want to do because you are not there. You may not know what sales are going through or what they want to achieve. But if you have edge from all of them, whatever budget they submit to you, you will call them to come and review, to come and defend it like a defending the budget. At the presence of the committee, you can get like 3. their boss can even be part of the committee. So last year you spent 200 million on production. This year you put 500 million. Oga, what happened? Explain. So they will now start explaining. NEPA has gone up, cost of material has gone up, this thing has gone up, and also we want to increase. Last year we produced 1,000. This year we want to produce 2,000. So if you are satisfied with their explanation, that you approve the budget, you can now put that budget into your own calculation. But if something is wrong, you reject it. Because if something is wrong with the budget each department has submitted, and you put it in your own financial statement, if you have funding gap, if you have difference between what you have and you are unable to meet up with the budget with inflow, now you, the management, will fire you and then sanction you. Why are we having this issue? Why are we having this? You are not competent enough. So you must make sure you put all these things in place as an accountant or as a chartered accountant. Okay, so budget not to be done by one person. Make sure you get, even if they're not good at figures, at least they will contribute to something that will make it successful. Most larger companies start their budgeting process for 4 to 6 months before the start of the financial year. So most organizations set budgets and undertake variance analysis on a monthly basis. So it's not because you want to start, if you want to, okay, this is December now. When I started, you are just preparing budget for the next year, 2025. And this is December, it's too late. Yeah? Should have gathered all this information, do your review, calculate everything, and then you sign. I think Nigeria too, the budget used to come later. Everything will start up first before they now bring the budget. So they spend anyhow before they now start correcting the budget. So budget should come even before you start that financial year, so that you can make sure that whatever you are spending is not out of the budget. So we have planning, communication, establish objective and target, budget committee, review and approve. That's then compilation and revision, then develop details budget, board approval. So once accountants prepare that master budget. Once, okay, I'm checking the time. Thank you, sir. Once it's 10 minutes to just 10 minutes. Once accountant completes the budget, master budget, so you have to communicate to the board if you are into big organization, or you have to communicate to the CEO. Okay, the CEO will ask you, okay, approve, let's go with this. The CEO can say, no, there are some things I'm seeing here. Implementation and management. So once the budget is there, it's not that you go and sleep. You will continue to review and monitor. So if one department is spending or they are about to spend more than what they have in the budget, you caution them. If you continue this way, you will spend more than what you have. How do you want to do it? So they will have to reduce, to make sure they are not going beyond that. Because if they go beyond it, it will affect the overall result. Okay. So the effect of budgets, targets, difficult on performance. So we have expectation, budgets, optimal performance budgets. You can see budgets, personal goal, actual performance. All this just to know if you are having adverse or what, or you're having favorable. Okay, so what is your expectation? Are you exceeding the expectation or you are below expectation? Some organization, their increment is tied to budget. So either you are meeting the target or you are below the target. Okay. Who should be involved? So it can be from top down or can be from other side. So impose budgeting. So we have imposed budgeting target for activities and costs, negotiated budgeting. So share responsibility for budget preparation. That is for departments. We will prepare That is the best one. One person should not be doing it. But there are some organizations that they don't have that structure is not there. So the only accountant that will do everything from the beginning. And you start giving them. But there are some organizations that they have different departments and different departments do it, and then they just give you and you compile it together. Then we have participative budgeting. Recommend targets for activities and costs. That is bottom up. So you call all your subordinates. So what do you think we should do this year? Oga, this laptop is done. We need to buy new one. And we also need to increase all this one. So we gather everything together. That's from bottom to top. Okay, so developing the budget. So these are the 4 common approaches to develop the budget. You can use incremental budgeting. So if you have information about last year, maybe revenue is 20 million. So you can say because I was able to meet my target 20 million last year. Okay, so this year, let's increase it by 10%. So 10% of that will be your budget this year. That is incremental. So using last year actual as a base, then we are now applying percentage as increment to get this year. So if I spend 20 million last year for transportation, and now fuel has gone up and everything has not scattered. Okay, let me increase that transportation by 20% this year. So that will be the base of that. So do it that way. Then value proposition budget. So we can value it, you can value things. So how much are they buying it now and the likes? Put that one. Activity based, that one is mainly for manufacturing. So we produced 20,000 last year. If we are going to produce 30,000 this year, so how much is it going to be? So we look at all those. Then zero-based budgets. Maybe you are just a new accountant. There's no budget before. So it means you are starting from what? From zero. So we now look at it. That will give you a bit tough time. But if you have information about last year, so you can just use the first one, incremental. So most people use incremental anyway. So just look at last year budget or their financial statement. What is their actual spending? Then this year that you are preparing, just increase it a bit and you are good to. Okay, so this is the incremental budget. So we can see plus the percentage, multiply the percentage of last year. So last year actual figure, then basis for this year budget. So there's no issue with that. You can continue. Zero budget, we have explained that you are starting from scratch. So we don't have issue with that. So cost structure and flexibility. So what is motion margin? Let's see how it goes. Put your mic, please. Your mic, you. Thank you. So quantitative forecasting method. So budget is actually quantitative. That is, anytime you are preparing budgets, figures must be there. You must have figures. Okay? So anytime you talk about budgets, figures has to be there. So there are a range of widely used quantitative budget forecasting tools, including we have techniques, moving average, simple linear regression, multiple linear regression. Some people use repeated forecast and the last minimal level, statistical knowledge. That is smart. For them, data we use for data needed. We need historical data, a simple relevant observations, like factors, like economic, like what is happening, inflation and the like. Then a simple relevant sample and the last. All this one, when we get to the calculation, we'll see. So you can see how it looks like. So you can calculate your budget monthly. You can calculate budget monthly. You can calculate it weekly, revenue, how many days, and the like. So all this one, tracking budget performance, I believe we all know what it means. Let me see how many we have left. Okay, that's just all. Okay, so let's just finish this and let's go. So tracking budget performance with variance analysis. So we are comparing budget, we are comparing actual to what? To budgeted. Okay. So you can see now we have variance, which is the original budget and reverse budget we have. Then we have actual and variance. So if our sales volume that we want to produce is 100, but we now produce how much? We produce 90. Oh no, the original budget is 100. Later now we cannot produce 90, 100 though. Let's quickly reverse our budget. They now reverse it to what? To 90. And they actually produce that 90. It means there's no variance. For those who have done advanced and standard costing now in PM, operational plan. So you can see that everything you are doing in ICANN is not it's not a way. Some people say, I don't know where they are testing this topic. It's because that's where you are. If you go far, you know that all these topics are here for something. Sales values. So you projected $1,000. It's not fixed time. So you can just let him finish. Okay, so we can see original budget to reverse standard. The difference, we all know the variance a bit. And very quickly, labor price can also change. Use of junior versus senior workers. So maybe you plan to use senior worker. Later say, let me manage this, let me use junior worker to do this. So those are the causes. These are the factors that can cause the variance. Poor supervision can also cause the variance. Then improper trained workers can also cause the variance. Machine breakdowns can cause the variance. Use of unskilled workers can cause the variance. Use of more skilled workers or more workers. If you plan to use 50, you are using 100. It also cost because you pay more. These are the things that can cause the variance. People of God. We will see next week by God. All right. Please help us share the account. Okay. Online, are we good? Any question? Are we free?
We are good, Mr. James.
Yes, ma'am.
Mr. James, I'm good though. Please, can you share this presentation with us?
I will share everything. I will share the presentation.
Okay. Thank you, sir.
All right.
Thank you, Mr. Professor.
Yes.
Auntie.
Thank
All
you,
right.
sir.
Thank you.
Lovely week, everyone.